Now on Sky News Business, this is Trading Day, the final count.
Hello and welcome to the final count. I'm Nadine Blaney.
And I'm Leo Shanahan.
If we take a look at the market today, Leo, we'll touch upon all of the really big stories. I mean, even before market open, we had announced our confirmation, I suppose, of the merger between TPG and Vodafone. But the market moves today were pretty interesting. We peaked on the open, up about 21 points. We saw U.S. futures turning a bit weaker during the session. And then we saw quite accelerated selling as we pushed past the 3 p.m. mark. Hit a low, down about 4 points, but as you can see, a pretty flat finish for the 200.
Just down.
So, joining us in the studio, Tony Farnham from Kodari Securities, Lawrence Parker-Brown from KOSEC. We also have David Lennox, who's joining us remotely from our Sydney CBD studio. So it's great to have all these guys with us. I'm curious just to get your thoughts, though, first, Leo, on, I guess, this TPG-Vodafone merger. Before we get into the market moves that it inspired, I mean, we sort of knew that this was coming.
Yeah.
But it's a big deal for the telco space, for corporate Australia.
It is a big deal, and you've got a $15 billion company now that could rival Telstra and Optus. There's a couple of big questions still to be answered. One is whether the ACCC, Rod Sims, will wave it through. I had a chat with him earlier today about that. They're going to have a 12-week review into this and come up with an answer. My tip would be that it will probably be waved through. He did have some concerns about the competitive nature of TPG and Vodafone at the moment, and the fact that they were both pretty tough competitors in both fibre and mobile, and that by combining them, are we going to get a less competitive outlook? Well, possibly, but I think the rationale of not allowing two tough competitors to merge to take on the behemoths of Telstra and Optus would be a bit odd if you didn't allow that through.
Well, let's hear what he had to say, shall we? Rod Sims from the ACCC.
TPG is a new player, an aggressive low-cost player, so this merger means that potential fourth entrant, who I think would be very aggressive, won't be there. So this is a transaction we'll look at very carefully. I'm not going to speculate too much now on where that will go, but we're conscious of how important this market is for every Australian, because every Australian's interested in having a competitive telecommunications market.
Because consumers ultimately pay the price. It's an interesting one because the new chair of this merged entity, David Teo, head of TPG, he's not a guy you see or hear very often, but they did hold an analyst briefing today, and here's what David Teo had to say about the deal.
This merger with great size, skill, and financial strength for us to compete with the incumbents, and that will bring tremendous benefit to the Australian consumer.
All right.
David Teo's made about $700 million in the last week over this deal, so he's not doing too badly, David.
All right. Tony Farnham, Kodari Securities, as I mentioned, is here with us in studio. Lawrence Parker-Brown from KOSEC, and David Lennox, of course. But I'd like to go to you first, Tony Farnham, because we really did see a massive share price movement in TPG.
Well, people think the usual synergies and other benefit rationalisations that come along with that. So there's a kicker, as long as it's delivered, obviously, and they don't upset the customer base and the staff that goes in and out the doors each day. TPG get in a nice dividend potentially. The combined business, a lot of the debt that's in Vodafone is going into another vehicle, so that exit stage left. And it's, from what I can see, Vodafone, they call it merger of equals, but Vodafone's got 4 of the 8 board members, I believe. And I'd say the final thing, of course, the businesses are, to a large extent, complementary. What TPG want is a mobile wannabe. Its fixed line is its strength. And in case of Vodafone, it's all about the mobile. The market's reacted on the basis that there goes a competitor. As a result, pricing's not going to be as aggressive, and I'm sure that's something that ACCC will look at.
Yeah, I mean, do we risk, are prices necessarily going to come down as a result of this? I mean, there seems to be this assumption that could happen. But as you said, I mean, we've got TPG who might pull back on their offering, on their mobile offerings, and then Vodafone pulling back on their landline and internet offerings.
Well, that's the market's thesis, and one of the key reasons why Telstra rallied on the back of it. Mobile is one of the key parts of the business.
Right?
No, it doesn't. That's what I've been saying all along. But people are saying, well, we're joining 3 and 4, so it's not that bad, and we have a few industry champions usually, but it's up in front of the ACCC leadership's eyes. The market has reacted because they see less competition being there. They are the competition authority.
How do you see it?
Well, if you like economics, you can study the Bertrand and the Corno models for oligopolistic behaviour. What's interesting is, obviously there's less competition with this, and Telstra potentially benefiting, but maybe they're better businesses, because if you wanted to be with TPG, I suppose one of the things that telcos like to offer is that wrapped service. We'll give you your broadband, we'll give you your mobile. So maybe they're better businesses, which is why you could maybe say that we're seeing a pop all round. I think it's a hypothetical right now whether or not this merged entity will be successful. So it's a beaten up space. I mean, TPG was up around $12, crashed down below $6. It's welcome relief for people who have been on that journey. I think broadly we'll have to wait and see whether it'll be, because they might come in with lower prices initially to try and get more market share. So maybe it'll be good. I guess we'll have to wait and see.
Yeah, David Lennox, I mean, we are a small nation by population, relatively speaking, and listening to some analysis today and reading some analysis, it seems as if 3 is the magic number when it comes to these mobile offerings in other countries, and these are countries that have much higher populations than we do here in Canada, or Australia. My mind wanders. David, are you a Telstra customer? I mean, how do you look at this from a consumer's perspective?
Well, actually, I'm a TPG and Vodafone, so I'm on both sides of the equation when it comes to being a customer. Look, we certainly think that the whole sector, now that Telstra's gone through its horror period and is perhaps looking to jazz itself up a little bit, probably will need to see some of its competitors also do the same. So we can't see Vodafone or TPG, we can't see the ACCC probably knocking them back. We think it will be, as already said, waved through. And perhaps it's just the start of the jazzing up of the whole sector. Yeah, we've gone through a whole pile of changes in terms of customers, but when you have a look at what the telcos have done themselves, they've probably done less than resource companies.
And it's interesting to know, we'll talk about resources later, David. In amongst this, I suppose, what was overlooked a little bit is that TPG and Vodafone have actually separately done a joint venture which will allow them to bid for this 5G spectrum independent of this merger that's taking place. So just a little PS to that one. Look, we don't want to spend the whole time talking about TPG and Vodafone and Telstra, although it is fascinating. Let's take you through some of the market moves, because this will really show us how it all played out on the market today. There's the snapshot picture. The telecommunications space saw the best gains overall, up by 3.6%. Infotech also up strongly with a 1% gain. It was quite a different story, though, for the consumer staples space, which was down by about 0.5%.
And today, 97 stocks rose, while 91 fell, and 12 held steady. So we're just slightly down. And the top movers.
CSL.
Still.
Saw some buying in CSL, Aussie dollar coming off, and there was a bit of selling in CSL yesterday. Telstra, yep, check there. TPG, check there. Transurban Group. Let's talk about Transurban, shall we? Because again, back to the ACCC, Rod Sims not.
Another significant decision from Rod Sims.
So, Tony, when it comes to the outlook for Transurban, clearly the market is thinking this is a positive going forward, up by 1.3%, but there's a lot to take into consideration with Transurban. Yeah,
that's right. It's best of breed in that utility space, and I would say even if bond yields in the US did get to 4% at the longer end, there's still ones you'd have in your portfolio because they are best of breed. And if they do get the WestConnex business in place in terms of their portfolio, they become even more best of breed. I think the issue is the New South Wales government wanted that to happen. They want a genuine bidding process to occur, more money for their coffers. But two, of course, they want someone to actually do it right, and they come with a pedigree.
Certainly.
How genuine is this? I mean, obviously, I'm not claiming the bidding process in itself is not genuine, but when you only have two operators and Transurban dominates the market as it is, they would have so many benefits today. Rod Sims saying, well, they hand over this traffic data, therefore it's more of a level playing field. Is this just a Transurban a certainty at this point, do you think?
Well, they're certainly the front runners. You never say anything's certain until the race is run, but you'd say they're front runners, and I'd guess too governments across Australia will be looking for plan Bs, because sooner rather than later the ACCC will say, sorry, you can't be in that one because you've got 80% of whatever the number is the market.
All right, let's leave Transurban for now. Let's talk about the biggest drag on the market. This is by index weight, and look no further than three of the big four banks. Note Westpac on there. So got a big leg up yesterday toward the end of the session after lifting its variable interest rates. We were anticipating perhaps the rest of the big four might follow today. Maybe they'll seek shelter and release a press release late Sunday night or something like that. But let's just put the focus back on reporting season, because Ramsay Health Care, you can see, treated pretty harshly. It was a big weight on the market by index weight. Lawrence Parker-Brown, Ramsay Health Care, are you on the side of the camp that believes that there are very real structural issues facing this whole space, or do you think that, you know, long-term trends and demographics will prove to be a tailwind in the medium term?
Yes, as you say, I think that I'm in the camp that there's so many headwinds, not least of all moving into this succession plan. When Chris Rex stood down, there were question marks about European division and the way they even account for all of the sort of the profits coming out of France and some of the debt there. This is a business where I think there are so many challenges, not least of all, are more people going to want private insurance moving forward that will pay for this? I know it's one of those sort of market darlings from sort of 4 or 5 years ago, and a lot of people will be very familiar with it, but even though it's beaten up, I think there's still challenges there. So I'd probably wait for a little bit of confidence to return, not least of all McNally stepping in. What is there that we can see some growth domestically?
In the context of the structural challenges that are there, and National Health Scheme, volumes down. We know what's happening here in terms of our private healthcare system, and people evacuating it because of desire for underinsurance to spend money elsewhere, and doubts about the French division and the acquisition they're about to make there. All combined, 2019 guidance core EPS growth of 2%, quite a bit below what the market was expecting, equals further sell down today, and that's going to be the ongoing process for them.
And, you know, I hate to bring this point up sometimes, but I mean, is this a case of an Australian company also going overseas and sort of failing necessarily to read the scene right? I mean, big investment in the UK and a big downturn in some of the emissions that they're seeing from the NHS. I mean, I know you take on risk when you go overseas, but have they executed that strategy as well as they could have?
I think the structural issues have some similarities across all those geographics, so I don't think they've done something wrong in terms of those businesses. From what I can see, I'm not an analyst that actually covers the stock to the nth degree, but it just seems as though it's these structural challenges are presenting all across the globe, and joy of the game if they're in that space. Look at Medicare Private, and we're talking about this in the other show before. You've got to find ways of getting ancillary or additional revenues, and aged care support and the like, Medicare Private's looking at this stage. So there's the plan Bs, and that's what analysts are going to be looking at going forward as they seek out recovery stories in these guys.
We'll see how the ratings perhaps change when it comes to Ramsay Health tomorrow. Sandfire Resources up by 8.5%. David Lennox from Fat Profits. I was speaking with the CEO of Sandfire Resources a little bit earlier today. Here's what he had to say when it came to costs.
The wonderful thing that we have is high-grade copper in both De Grassa and even higher grade at Monty. So when we start to look at the operating costs per unit, we see essentially a reduction in the unit cost as a consequence of having higher copper units per tonne of material. So that really assists us in achieving those very, very low unit costs. And in fact, the year in question, we've seen a record in terms of how low our costs have been. So it's been an incredibly satisfying year for the company.
Yeah, it was a really happy CEO there, David Lennox, when we were speaking earlier today. What did you make of the result? Because there seemed to be a lot of strong metrics, but did miss on earnings to some estimations.
Yeah, look, we have seen that. Analysts seem to have been somewhat a little more bullish than we've seen for a lot of the resource companies. But look, the absolute result was a very good one. How can you knock back a record net profit? Yeah, they did it on the back of, as just said, on lower costs, higher production, and also you'll see that they got a better copper price out of it all as well, so, and gold price. So from that perspective, it was just an excellent result, and a good way for actually the resources sector to probably finish off the season pretty much in terms of the big ones. So that was the market response, I think, just tells you the whole story. Markets have been somewhat knocked around for the last couple of years in resources. Last year we saw good results coming through. This year we've seen the same, and now the prices are catching up with what the finances are doing.
Dave, Tony Farnham here from Patterson's. The issue is the production guidances they gave for this year are pretty good, aren't they? Also as well, what about the US business they keep talking about? Do you see positivity from that angle?
Look, certainly, yeah, they will get further, we think, out of Monty and DeGrussa. We're not quite so sure what will happen about the US business. It does suffer a little bit in terms of, unfortunately, the US-denominated copper prices and gold prices and what that does inside those operations in the US. But overall, look, we think that they're going to certainly concentrate on ensuring that DeGrussa and Monty remain optimised. And with that, we think they'll certainly, if the copper price and gold price can stay somewhere near where they are reported for 30 June, we think they'll have a fairly good 2019. But we're not backing the horse on that one.
Yeah, Carl Simic today telling me that, look, the workforce in the US is so strong. They've got really strong support going on that project. And he was quite bullish for the price of copper going forward and was, at pains to talk about, the growth of the EV market and also some of the sort of green technologies that will require copper going forward. So do you like Sandfire there, Lawrence Parker-Brown?
Oz Minerals and Sandfire are a sort of pure play on that copper thematic. And the copper was sort of at 5-month lows, I think, quite recently. It's seen as sort of a bellwether for economic success around the world. I'd prefer to be in that diversified play like a South 32, just because you're all in, but it depends obviously how you've weighted that, but it's not one that we've had a buy on recently.
Right. Okay, we're being told we've got to take a break, but when we return, we'll put the spotlight on today's top and bottom movers. Plenty more to discuss on the other side of this break.
You have the charisma of a damp rag and the appearance of a low-grade bank clerk.
Big government. I can't stand it.
You have no legitimacy in this job at all.
Let Ferrari Formal Wear and Bridal make your wedding unforgettable. Visit ferrariformal.com.au for your chance to win a $5,000 designer wedding package.
Oh hi, this kitchen, complete with Italian marbles. The view, breathtaking. It even comes with a granny flat and my very own library. The neighborhood's great. The only problem is...
Who are you?
I don't live here, because the real estate agent never showed us this place.
For myself and you, I know this love is true. And I never, 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 never let you go. First talk, first touch, first night. I'm so happy, not like back then. I never thought I'd fall in love again.
Looking for a hotel? Nobody beats Mr. Convincing on price.
Really? Their price? Hotels Combined Price. Their price? Hotels Combined Price. Don't be fooled. Before you book, check Hotels Combined.
Hotels Combined.
September 11.
What exactly is a ball? Balls are a gathering of people who are not welcome to gather anywhere else.
From Ryan Murphy.
What do you want out of life? I want to be treated like any other woman.
The brand new series.
Twirl. Baby, you are our secret weapon.
Pose begins Tuesday, September 11 on Showcase or stream on demand.
Coming up on Sky News Real Estate.
Bargain hunters are Victoria bound. Kate Bakos got there first and she'll tell us where she's heading next.
How to find the best accommodation for you and your pet and the new laws which change everything.
Now, back live with Trading Day, the final count.
Hello and welcome to the program. This is the final count. We've got a great panel here for you today. We've got David Lennox from Fat Profits, who's joining us from our remote Sydney studio. We also have Lawrence Parker Brown, who's here from KOSEC Kodari Securities, and we've got Tony Farnham from Patterson's Securities as well. Let's, though, gentlemen, take a look at what moved the market today by percentage change. And here's a look at the top 5 performers, Leo.
And the top 5 performers, TPG, of course, on the back of that great merger news. Sandfire, as we were just discussing. Speedcast, up about 4.21 points.
Yeah,
about 6%.
Still down about 30% since it reported its results.
Down 40% the preceding 2 days.
Still doing quite well, up just over 4%.
Yeah, if we look at some of the worst performers, and this again is by percentage change on the 200, well, we've already talked about Ramsay Healthcare, Atlas Arteria, Platinum Asset Management, Bellamy's, and Afterpay Touch Group. Lawrence, now I know that there's been a lot of exuberance around Afterpay as of late. It has, though, come off the boil just in the past few sessions, and perhaps that's over-egging it because it's still boiling hot. I mean, is this something that you look to get into when you see a few days of pullbacks, or is it still a little bit of nosebleed territory for you?
I think it's been one of the most exciting stories this calendar year. We've not got onto the journey at all because it really divides. It's a bit of a Marmite stock, isn't it? Those that feel that it's disrupting credit cards and that there's huge market penetration in the States. Likewise, there's regulatory risk. There's also potentially the challenge that you might find that someone might question what checks are happening with all these people that are taking on credit. Do they even really understand what this looks like moving forward? I'm a real bear on this stock, and I've been wrong all of this year because I've watched it move from sort of $5 upwards. Everyone asks about it, and it's great that we cover it on TV. I think if you like the story, you'll probably get a chance soon to get on because it is coming down. I think it's expensive right now.
Is that, maybe Lawrence Parker Brown was making a bit of a point there. David Lennox, do we talk about these stocks too much, the Afterpays of the world, or is it just such an interesting story as to see these potentially high growth stocks? And I don't think you really put Afterpay in the same basket as, WiseTech and Appen and the likes of those.
No, we certainly wouldn't, but you've got to remember that with these high growth stocks does come the high risk of if they're priced to perfection and something just happens to go wrong, then unfortunately you see them going down in the lift. And that's what we've seen with a number of them. We're getting quite used to it with resource companies, but it's not quite the same, I guess, view when it comes to industrials. They tend to be a little more less volatile, I should say. So when you're priced to perfection, it doesn't take a lot for investors to suddenly change their mind, and you see 30 or 40% of your share price shed in a few days.
One of the associated companies got an instalment of shares and they sold them on the day as well. I think Swift, it was. That would have impacted the market. They get another lot as well, February next year. You got Platinum on there. There's nothing wrong with Platinum. They went ex-div today.
Oh, good. All right, good. Thanks for clarifying that. Platinum was down by about 5%. Hey, David, when it comes to reporting season, as you mentioned, a lot of the big guys have already come and gone. What do you make of it? I mean, costs were a big focus when it came to the resources plays, but what were some of the other big themes that you were watching for, and were your assumptions confirmed?
Oh yeah, there's no doubt about it. We were thinking for some time that prices were going to play a big part in the 30 June reports, or whether half year or full years, and that certainly played out. And costs, yes, that's been a big one. A couple of things that really do stand out. The industry broadly hasn't looked externally at the moment. It still seems to be focused internally. They're repairing balance sheets, they're rewarding shareholders. So we haven't seen that big splash of cash. And I can tell you a lot of those resource companies, the producers especially, are sitting on big buckets of cash. So let's hope they can keep their hands in their pockets a little longer. And we think that we're expecting to see perhaps not quite such a good cycle in commodity prices for the next 12 months. So hopefully they can keep their hands in their pockets and get through what could be a difficult 12 months for the resources.
Yeah, it was definitely a theme for the big guys like BHP, you know, that streamlining of operations and focusing on the fundamentals, I suppose, getting rid of some awful investments in America, etc. But who actually were you surprised by in this reporting season, resources-wise?
Look, we certainly think that the coal companies stood out somewhat. Whitehaven springs to mind in terms of how they've performed, given that the backdrop that we've seen that industry faces. So excuse me, that's a big tick. Look, the other one was the gold sector. We did expect that it would perform very well, and in fact it's probably performed better than our expectations. So we're starting to move now more towards wanting to hold more gold stocks than perhaps some of our base metal friends.
All right, and after the market close, we've heard from Freedom Foods, just sticking with this reporting season theme. Annual net sales increasing by close to 35%, operating earnings up by close to 50%, operating net profit increasing by 97%. Final dividend has been increased to $2.75 per share, and FY 2019 net sales guidance unchanged at between $500 and $530 million. So we will no doubt be watching for market reaction when that comes online tomorrow. It's face value, sounds great. Yeah. Huge thank you to our guests in studio, Lawrence Parker-Brown from KOSEC. We've got Tony Farnham from Patterson's, and to you as well, David Lennox, sitting there in our Sydney CBD studio.
Well, that's all we've got time for. Stay tuned for Tiki coming up. I'll be still there next. Thanks, Nadine.